There is consolidation. The one stock which is on our radar all through this morning is Dixon Technologies. Good numbers coming in as expected, but the stock under pressure. That's largely on account of perhaps the fact that they fell short of their full year guidance on revenue, but more importantly, lack of valuation headroom available out here. Saurabh Gupta, who's the Chief Financial Officer of the company, joins in now, down 7% for Dixon Tech. Saurabh, thank you so much for joining in. You did see good growth. For the year, it was 120% on the revenue, but still short of that 40,000 crore target that you had for the entire year, and higher contribution coming in from lower margin products like mobile segment, etc. So if you could give us a sense on what your prognosis for FY26 is when it comes to revenue and product contribution.
Yeah, clearly we have a very strong order book across all the verticals led by mobiles, and even the IT hardware now from this fiscal year will start to deliver numbers. And we've already formed a large partnership with Inventec, which will really add to the profitability and revenues in the coming years. There's a huge focus on backward integration. We are getting into 4 component categories. We will leverage this component scheme announced by the government. So my sense is in revenue-wise, we can expect a 40-45% revenue growth this year. And we feel that through operational efficiencies and also through backward integration play, and also through higher contribution of some of our refrigerator business, which is higher margin business, I think so there can be some margin expansion which one can expect in this current fiscal as compared to the last year.
How much could the expansion be?
My sense is we can expand the margins by 20-25 bips in the current fiscal as against last fiscal on a much higher top line growth.
Okay, all right. Saurabh, there have been some reports of slowdown in mobile phone sales post the festive season, in the earlier part of this year. What were your volumes like in Q4? I do understand that it was quite flat on a sequential basis. And what is the ramp up that you're expecting, and what are the headwinds that you're facing when it comes to these sales?
Yeah, one of the reasons our revenues are flat on quarter basis is basically the mobile revenues were kind of flat. Of course, the margins were slightly better. So we closed the year with around 28 million smartphone volumes. Last quarter, my sense, it was somewhere around 7 odd million. But we are expecting a significant growth this year. This 28 million can potentially go to 43-44 million, out of which 10 million can come from exports. So there'll be a significant jump in export volumes. So last fiscal year, we just did 1.5 million of exports for our anchor customer. And this year, we are expecting almost 10 million worth of exports. So that will be a large jump for us. And our big upside can happen in 26-27 when our JV with Vivo should start delivering. So then we can expect a volumes of somewhere closer to 65 odd million. So clearly, in the next couple of years, I think so we should be able to more than double our revenues and volumes in the mobile business.
All right. Hi, Saurabh. Good morning. Good to see you in. Nigel on this side.
Hi, Nigel.
A quick question with regard to this export contribution that you have. As a percentage of business, how much is exports? Where do you see this number headed?
Yeah, so Nigel, last year it was around 5 odd % of our revenues. So on 39,000 crores, broadly 5%, 1,700, 1,800 odd crores. This year, my sense is that number can be almost closer to 9 to 10,000 odd crores. So both as a percentage and both in absolute numbers, that number will increase for the company. And exports is a natural trajectory for our growth. We think that exports as a percentage of revenues will keep increasing given the geopolitical tailwinds now in India's favor, and also companies like us really investing in backward integration, companies like us attaining a particular scale and size, and matching those cost structures at a global level.
Okay, all right. Just one more question with regard to these exports. Could you tell us, is there a realization difference between exports as well as domestic? And in turn, would there be a margin difference as well?
Yeah, so definitely both in terms of realization, definitely, Nigel, it will be at a much higher selling price because the global markets, it's more high-end products and all more 5G products. And also some of the customers are also from whom we are manufacturing have higher selling prices. So clearly it will definitely much higher on the selling prices. And I feel it will be margin accretive for the company as well.
Right. In realizations, what is the difference and how much margin accretive? If you could just give us a brief idea, that will help, it'll help us going ahead as well.
My sense is every year the ASPs are going up, and I expect that the selling prices should go up by another 8 to 10% this year. So that should lead to a significantly better growth than the revenue growth here, but than the volume growth. Yeah.
From a industry standpoint, what are your thoughts? Because you said that there are manufacturing tailwinds for India. There definitely are, but some say the tailwinds may have slowed down largely because of the US-China trade deal that has happened. So maybe increased manufacturing orders may not come to us at the pace at it would be earlier. I wanted you to chime in on that. And what's the growth visibility that you have beyond FY26? You said 40-45% for FY26, and thereafter you have the Vivo contract coming in. With the kind of capacity addition that you're doing and the contracts that you've been signing, if you have a visibility for beyond FY26, maybe all the way up to FY30?
Yeah, just to answer your second question first, I think so 27 can be even a larger growth for us. Of course, led by mobiles, IT hardware, and of course, the other verticals as well. So we expect that in next 2 years, I think so the revenues for the company has the potential to more than double from 39,000 odd crores that we closed in the last fiscal with a decent margin expansion. And as far as your first question was concerned on the tailwinds, clearly for some of our anchor customers, we have expanded our capacities by 50%, and we are seeing a 50% growth in that order book. And when I said that 1.5 million potential exports for last year can go to 10 million, it is mainly on account of this geopolitical things which are evolving right now. So my sense is even after the tariff on China or the trade deal that China and US are having, there's still a decent arbitrage and will be an arbitrage between India and China as far as the duty structures are concerned.
Okay, so you're expecting a positive arbitrage to play out for you. Your consumer electronics division, Saurabh, your TV category especially continues to be under pressure for many quarters now. What were sales this quarter, and why is that? What are you trying to do to revive it?
Yeah, so TV definitely has been in pressure. This has a structural issue, and not only in India, globally, TV sales are coming down. People are consuming entertainment on other mediums. So clearly, there's a shift in consumer preference. So one, we are getting into more categories like displays, IFPDs, and all. And also, we are trying to forge some partnerships in this category, which will, of course, help us get some more business, and we'll try to bring this business back on track. So a lot of efforts are being made. But our other piece of consumer electronics, which is refrigerator, is doing very well. In a short period of time, we have been able to take a large market share in this category. And we expect a 45-50% growth in that category, and which is also coming at a very high margins for us. So yeah, TVs, yeah, my sense is there was a dip in volumes, but yeah, we are making some efforts to get into more categories, getting into some more ODM-driven products, and try to get into some kind of a partnership.
Okay, all right. Saurabh, there's this big China +1 and India being the beneficiary. Now, considering the tariff uncertainties, is there any possibility that Samsung, Vietnam as well as Motorola will shift their global production basically from the Vietnam to other countries, to India? That is the hope. And is Dixon expected to be a beneficiary of the same, that entire shift from other countries to India? And has your phone been ringing with these kind of inquiries? Go ahead.
Yeah, so Nigel, definitely the inquiries have significantly increased. And one of the customers that you mentioned two customers. The second customer, definitely, I mentioned that is a customer we are expecting a significant increase in volumes by almost 45-50%. And out of which 50% of those volumes will be for the export markets. So clearly that shift or that the movement has already happened for us now, at least for one of our anchor customers.
If you could give us a couple of more details here. One is what is your current ODM share of your overall revenue? Because that's a margin accretive business. Where do you intend to take that? That's point number one. And secondly, while the benefits of PLI start to wane off, you are doing the backward integration. So what is that offset likely to be? Because you're targeting revenues doubling, say 80,000 crores over the next couple of years with significant margin expansion. What are the drivers for the margin expansion? How much of that will be because of increasing ODM mix, increasing export mix, and your backward integration? And how does that get offset by the PLI benefits?
See, as an overall number, ODM is significantly increasing for us, but as a percentage, it may not be reflecting because a large part of our growth will be coming from mobiles and IT hardware as a category, which is majorly prescriptive driven, and we don't have our designing solutions as of now on both those categories. But my sense is the margin will expand One on account of the backward integration play. So we have narrowed down on 4 components. Displays, we have already signed up a partnership on HKC, and which is expected to, the trial should happen by Q4 of the current fiscal, and the mass production should happen from Q1 of next financial year. Secondly, we are in advanced stages of closing a partnership on camera modules. And then 2 other components, which is lithium-ion batteries and enclosures, we are actively working on. So we feel that all this component play will come at a very high margins for us. It adds a lot of strength more into the business, and from getting into this backward integration, I think so we should be able to overcome the loss in the PLI income that we are booking in our books. And also we are working a lot on driving our operational efficiencies, working a lot on automation, robotics. So that's a continuous work right now. And we feel that through a combination of all these 3 things, not only will be able to mitigate the loss on the PLI thing, but also we'll be able to expand our margins in the next couple of years.
So what margins are you targeting on an 80,000 crore top line?
And next couple of years, if everything goes as per the plan, I think so there can be possibility, if not more, at least a 90 to 100 bips kind of a margin expansion is possible.
All right, Saurabh, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Dixon Technologies.